If you're a freelancer, you already know the feeling. One month you're swimming in cash. The next month, crickets. No clients, no income, and a stack of bills that don't care how slow your business is right now. Here's the hard truth. Most budgeting advice out there was written for people with a steady paycheck. It doesn't work for you. And that's exactly why so many freelancers stay stuck in a cycle of feast and famine. Not because they don't earn enough, but because nobody ever taught them a system built for the way they actually get paid. In this video, I'm going to give you that system. A complete step-by-step budgeting framework designed specifically for freelancers and gig workers, so you can stop stressing about money and start building real financial stability no matter how unpredictable your income is. Let's get into it. Section 1. Why normal budgeting fails freelancers. Most budgeting systems, like the popular 50-30-20 rule, assume one thing: that you know exactly how much money is coming in every single month. 50% to needs, 30% to wants, 20% to savings. Simple, right? It is, if you have a salary. But as a freelancer, your income doesn't work that way. You might make $8,000 in March and $1,200 in April. You might land a huge client in June and lose 3 clients in July. Traditional budgeting completely falls apart when your income swings that dramatically. The second reason normal budgeting fails freelancers is taxes. When you work a regular job, your employer automatically takes taxes out of every paycheck. As a freelancer, that's 100% your responsibility. And if you're not budgeting for it, you will get hit with a tax bill at the end of the year that wipes out everything you saved. And third, irregular expenses. Freelancers often have costs that traditional employees don't think about. Software subscriptions, equipment upgrades, business insurance, a slow season that forces you to dip into savings. So before we talk about what to do, you need to understand why the standard advice doesn't apply to your situation. Now let's build something that actually does. Section 2. Step 1. Calculate your baseline number. The foundation of any freelancer budget starts with one number: your monthly baseline. This is the absolute minimum amount of money you need to cover your essential expenses every single month. Not your wants, not your business investments, just the non-negotiables. Here's how to calculate it. Write down every fixed monthly expense you have: rent or mortgage, car payment, insurance, utilities, groceries, phone bill, minimum debt payments. Add all of those up. That is your baseline number. For most freelancers, this number falls somewhere between $2,500 and $5,000 a month, depending on where you live and your lifestyle. Why does this number matter so much? Because it becomes your financial floor. In any given month, your only true goal is to clear this number. Everything above it gets allocated strategically, and we'll cover exactly how in a moment. Write this number down right now. Seriously, pause the video if you need to. Your baseline number is the single most important figure in your entire financial life as a freelancer. Section 3. Step 2. Set up the freelancer savings system. Here's where most freelancers go wrong. They use one bank account for everything. Income comes in, expenses go out, and whatever's left, they assume is theirs to spend. That is a recipe for disaster. Instead, you need to set up what I call the freelancer 4-account system. 4 separate bank accounts, each with a specific purpose. Here's how it works. Account 1, the operating account. This is your main checking account. All client payments come into this account. All business expenses come out of it. Think of it as your business hub. Account 2, the tax account. Every single time money comes into your operating account, immediately transfer 25 to 30% of it into this account. Do not touch this money. It is not yours. It belongs to the IRS. Having this as a completely separate account removes the temptation to spend it. Account 3, the stability fund. This is your freelancer emergency fund, but it's bigger than a traditional one. Your goal is to build this up to 3 months of your baseline number. So if your baseline is $3,000 a month, you want $9,000 sitting in this account. This fund is what protects you during slow months, so you never have to panic. Account 4, the personal account. This is the account you actually live from. Once you've covered your taxes and topped off your stability fund, you transfer your personal salary into this account. We'll talk about how to set that salary amount in the next section. This 4-account system creates automatic discipline. You stop having to make willpower decisions about money because the system makes the decisions for you. Section 4, Step 3, pay yourself a consistent salary. This is the single biggest game changer for freelancers who struggle with money, and almost nobody talks about it. Pay yourself a fixed monthly salary. Here's how it works. Look back at your income over the last 6 to 12 months. Add it all up and divide by the number of months. That gives you your average monthly income. Now take 70 to 75% of that number. That becomes your monthly salary. So if you averaged $5,000 a month over the last year, your salary would be $3,500 to $3,750 per month, transferred to your personal account on the same day every month, like clockwork. Why not pay yourself everything you made? Because in your good months, you're building a buffer that covers your slow months. The goal is income smoothing, turning your unpredictable freelance income into something that feels like a steady paycheck. In months where you earn above average, the extra sits in your operating account as a buffer. In months where you earn below average, you still pay yourself the same salary from that buffer. Your personal finances stop swinging wildly with your business income. This one change alone will reduce your financial stress by more than anything else in this video. Section 5. Step 4. Handle taxes like a pro. Let's talk taxes, because this is where freelancers get absolutely blindsided if they're not prepared. As a self-employed person, you are responsible for paying what's called self-employment tax on top of regular income tax. Self-employment tax alone is 15.3%. Add federal income tax on top of that, and you're looking at setting aside anywhere from 25 to 35% of your income, depending on how much you earn. The IRS doesn't wait until April either. As a freelancer, you're required to pay quarterly estimated taxes 4 times a year. The due dates are typically mid-April, mid-June, mid-September, and mid-January. Missing these payments can result in penalties. Here's what you need to do right now. First, as we covered, keep your tax account funded at 25 to 30% of every payment you receive. Second, set those 4 quarterly tax dates in your calendar as recurring reminders right now. Third, consider using software like QuickBooks Self-Employed or a simple spreadsheet to track your income and deductible expenses throughout the year. Speaking of deductions, this is money most freelancers leave on the table. Your home office, your internet bill, your software subscriptions, your phone, your equipment, your health insurance premiums, all potentially deductible. Track every single business expense because it directly reduces the amount of taxes you owe. If your income is above $50,000 a year, strongly consider hiring a CPA who specializes in self-employed clients. The money they save you will far exceed what you pay them. Section 6, Step 5. Plan for the slow seasons. Every freelancer has slow seasons. The mistake most people make is being surprised by them every single year. Instead, get ahead of it by doing a simple income audit. Look back at your income history month by month. You'll almost always find a pattern. Maybe January and August are consistently slow. Maybe you pick up heavily in Q4. Whatever your pattern is, map it out. Once you know your slow months are coming, you do 2 things. First, you ramp up your client outreach and marketing in the 1 to 2 months before your slow season hits. You want to either land more work before the drought or have projects lined up to carry you through it. Second, you use your stability fund strategically. During your strong months, you aggressively top up that account. During slow months, you draw from it to maintain your salary without stress. This is exactly what that fund is for. The freelancers who thrive financially aren't the ones who avoid slow seasons. They're the ones who plan for them like clockwork every single year. Let's quickly recap the 5-step system. Step 1, calculate your baseline number so you know your financial floor. Step 2, set up the 4-account system to automate your financial discipline. Step 3, pay yourself a consistent monthly salary to smooth out your income. Step 4, handle your taxes proactively every quarter so you're never caught off guard. Step 5, map your slow seasons and plan for them before they hit. This system won't make freelancing less unpredictable, but it will make your finances completely stable regardless of how unpredictable your income gets. If this video helped you, hit the subscribe button right now. We post practical, no-fluff personal finance content specifically built for freelancers and gig workers every single week. And if you want to go deeper, check out the video right here on how to handle self-employment taxes step by step. I'll see you in the next one.